Hi, I'm Alex at Tax Assist Accountants and talking to you today about tax changes from April 2023. So it's that time of year when obviously we're looking at dividends and taking dividends now or whether to defer them until after April, all with a view to making sure that income year on year is stable, but also taken out in the way that keeps those tax rates overall, as low as possible. Um, it remains important to for you to think through the timing of your dividends and to that importance of timing remains absolutely absolutely paramount as it has done. um there is though another change that we need to factor in this year. There are obviously austerity, blah blah blah, all that stuff. Tax rates are going up, so that's why we need to just look and just help you become aware, obviously, of what those changes are, so you can factor them in if you need to. If there's anything that I run through here today that you want to share with friends, colleagues, etc., feel free to, of course. So the main change is around corporation tax rates. We enjoyed, I say enjoyed, that's the wrong word, isn't it? But we've had a tax rate of 19% on company profits now for a good number of years. It's allowed easy planning in that sense. Um, Unfortunately, we're now back to essentially like a small profits rate and a large profits rate, meaning that only the first £50,000 of your profits will be taxed at 19%. Um, the way this works is that profits over £250,000 will be taxed at 25%. And the devil in the detail here is that for profits in between, they're going to be taxed at 26.5%. Um, how does that work? Well, trust me, it does. It's essentially it's intended to provide a sliding scale of tax. The tax that a business will face for I suppose on an overall scale. But in terms of what to take away from what I'm saying, then um, bear in mind this. Let's say your business earns £90,000 profits. So before tax, there's £90,000 there, which is going to be taxed. Now that £90,000, the first £50,000 will be taxed at 19%. The next £40,000 of those profits is taxed at 26.5%. So that's I suppose that's the takeaway. That's the thing to remember. And obviously, from that, then that's why we start to perhaps think a bit more about making sure that our company pays for as much as it possibly can do before tax is charged. Now my mugshot won't stay there, so if it disappears again, I'm going to let it go. Right. Okay. Away from corporation tax, what are we looking at? Well, income tax changes. There's a lot more stability here, to be honest. The major change is that the additional rate of tax, so this is the 45% level. This only is it's going to kick in now at a lower level at £125,000, 140, reduced from 150. Other thresholds are staying the same. Unfortunately, personal allowances, tax-free allowances aren't rising. The 12,570 tax-free allowance is staying static at 12,570. Dividend tax rates, they are unchanged. Worth saying, they did rise this year. So those tax rates at the basic level are 8.75%. At the higher rate tax level, those are 33.75%. And if you're at the additional rates or earning above 125k, then it's the 39.35% that's relevant to you. One other aspect here, the dividend tax-free allowance has reduced from April. It's no longer £2,000, it's half that, £1,000. So what are we going to do about these changes? Well, yeah, more focus on trying to save money wherever possible, of course. So things to highlight to you. Electric vehicles, they remain a good idea in your company. The tax case for them is very strong. Tax rates are rising a little bit over the next few years, but having a company pay for an electric vehicle, there's a lot more choice out there. There's a lot of good choice out there now. So if you're looking at replacing a vehicle, then you should compare an electric vehicle to a regular vehicle. Now, let me rephrase that. You should compare an electric vehicle via your company to a regular fueled vehicle paid personally. You know, you might be surprised at the numbers. We can help you with that. Um, and on a wider level, then yeah, continued focus on making sure company profits are as low as possible. So making sure those salary levels are efficient. Obviously, that's something that we will do, and we will make sure your salary levels are at the right level. Um, but on a wider basis, then could you bring in a spouse if you haven't already done so? There needs to be commercial grounds for doing that. We can help talk that through with you if that's potentially relevant. Um, there's lots of small things as well. Now, I covered a lot of these recently in a budget fight back video. Please do take a look at that. I'll pop the link to that in the comments to this video. Um, the major wins, I suppose, for company planning, then they remain pension contributions. Um, Putting life insurance, sounds a bit of a random one, life insurance through your company. Most of us need life insurance, so have the company pay for it. Definitely a big win. And also restructuring. So looking at who owns the shares, could ownership be spread among more family members? That could be something that's worth looking at for you. So that's it. Obviously, we're here to help with your thoughts, with any planning you want us to look at, any questions that come out of this. Feel free to let me know or any of the team members know here, and we'll be pleased to help. So hope it's been useful. Thanks very much.